Good evening, friends. This is Ella, your friendly neighbor in Ireland. Welcome back to my channel. Today, I'm going to show you how to read your P21, which is basically statement of liability, or you call it income tax return file, whatever. This document is given to you by revenue once you file your tax returns. And this document will tell you all the details of your income, USC you paid, PRSI you paid, tax credits, tax deducted, all sort of information. And it's very important for you to know how to read this, basically, to because if you know how to read this, it makes more sense where you're losing money, where you can save money, and where you can basically reduce the taxes you pay to the government. This here I had a sample which I got from the internet. I can't show mine. I tried to readapt it, but I couldn't. So I'm going through this, but this is from 2016. The values and all may be different, but the document is still the same. Here in the sample, if you see the total income according to this statement of liability, RP21 is 25,085 close to zero. Yeah. And then 20% of it as it is below 35,300, 20% of that would be close to 5,000. That was supposed to be the tax that needs to be paid. And then if you see here, it says plus adjustments, the few adjustments that needs to be uh, done or added to that particular tax value. And you find that in 7B. Let's just go to 7B and come back. In 7B, if you see, the adjustments are nothing but the refunds received. The person, the main partner, has received refunds of 2008 86.61, whereas spouse received 36.668. So the adjustments on the tax would be basically the refunds which you received over the year. So basically, as you receive refunds, you add it back to the taxes to really know how much money you owe to the revenue. But again, out of this tax money, you deduct the credits which you get, and you also deduct the tax you paid till date. Now, if we go to panel 4 there, you can see the tax credits. The tax credits for this partner, I think he's a primary worker, so he has personal tax credit. And this form is basically a joint assessment statement of liability. And he got 3,300 as personal tax credit because he took 1,650 from his wife. And there's a paid tax credit of 650.003. I think the spouse got paid tax credit of 66.93. Sometimes if there are any flat expenses, the other partner gets a tax credit on that. So that's included there. So the combined tax credit is 5016.93. That needs to be, subtracted from the tax owed to revenue. And if you see here, tax deducted, these would be the taxes you paid to the government, and panel 2 has that information. If you go to panel 2, you can clearly see the taxes. The tax deducted for self is 2615.656, whereas spouse, it's €6. And on the left, you have the income of the people who are involved in this statement of liability. So basically, you add this up and subtract that from the tax you should be paying to the government. And if you see, if you subtract, it's not negative, it's positive amount. So this would be the amount you pay to the government. Wherever you see the term underpayment, it means that you owe revenue money. If it is overpayment, it means that revenue owes you money. Now, if you come back here, this USC section, usually the USC value is 1%, 3% is different. And then even in the new ones, you also find PRSI. Now, if you see here on the USC, the USC deducted was 719.43, but she was not supposed to pay that much money. She was supposed to pay 120. She or he, sorry, was supposed to pay 120.12 plus 333.98. So there's an overpayment of 265.33, and the spouse is earning less than 2,000 euros. So if you're earning less than 12,012 euros, you have basically zero USC. So it's a complete USC exam. But she paid 36.38 towards USD. So that's an overpayment. Add this up and subtract it from the above. When I subtract it, it's 0.02 underpayment. So you need to pay 0.02 to the government or to the revenue. Always remember, if you do not pay underpayments, uh, the one thing which would be a problematic thing is if you're applying for STB scheme, they come back to you saying, hey, you have a lot of underpayments, or maybe some other scheme where the revenue underpayments are part of. That's where they'll come back to you asking, hey, can you pay back the underpayments and all. So this is how you read your P21. On the first page itself, you will know how much needs to be paid or how much you're going to receive from the revenue. Next page is about, including the details regarding tax credits, tax payments, refunds, and USC. It's as simple as that. If you have any questions, comment below. But don't forget to subscribe to my channel and support me in making much more interesting videos and helpful videos. Thank you.